They have been like profitable for the past 6 quarters. Then why this sudden quarter itself they went negative? Definitely is worth looking into. And after earnings have been released, the market wasn't reacting very well. It went down a bit, like 5 to 7%. I think it's a good time to look into it and see whether it is posing as a threat to existing shareholders, or is it actually a good time to enter? Some of the key reasons why there was a drop could be due to the fact of the profitability side. Some people are saying that it's because of the quarter four's outlook is not good, it's not as high as what the analysts expected. On the other hand, some people are saying that they are losing customers because of the outage issue, and then you can see from their the result is that the net new ARR, which is the annual recurring revenue, right, is actually dropped from a year ago, which is it a big thing to worry about? And today we will slowly unfold, and maybe it will give you more confidence in this company. From the earnings itself, I think they are doing quite well. That in the sense that their ARR has reached more than 4 billion, which means to say if everything goes smoothly, next year itself they're going to be generating a year's worth of like $4 billion. So I think that is a good sign for this company. And this quarter itself, they have passed the 1 billion quarterly revenue. Quarter itself, a lot of things that they are covering, which is talking about how they are managing to retain their customers, which is a big thing for them because of the Microsoft outage issue back in, I think, July 19, right? Because of that, people are, or analysts are saying that this big issue is going to cause them to lose customers, which they did in the short term. But results have shown that they have gotten back or retained back the customers about 90 plus or 97% in terms of their branding, their capabilities. And this is where a comparison study from Gartner or even like Forrester Waves, right, you can see that CrowdStrike is actually one of the higher tiers on the top right hand corners. So for the Magic Quadrant, I think this is something that you might have seen for your companies, for other companies as well, right? And what is this chart telling you, right? It's basically out of these 4 quadrants, right? What you need to know is that you want your company or the company that you are investing in to be on the top right hand corner. Why is this the case? Because in this chart itself, it tells you on the x-axis, which is the one on the horizontal line, it tells you like the completeness of the vision, meaning to say how much are they covering, how holistic are they, right? And on the left side, which is your y-axis, right, it's telling you how are they able to execute it. Right. So in a sense, you need to be able to vision and also be able to action. We want our companies or the management to be able to talk and then to act also. So this is where this chart comes in nicely. And if you find that your company, the one that you're working in, so if you're working in a listed company, it might not be as bad as you think to look into this kind of stuff. And also to analyze your company, whether it's worth investing. Okay. So if it's not, then you might want to second guess whether you should consider moving to the next path. Okay, but anyways, if you find that your company is on the bottom, which is a good thing because they have a vision, but they are lacking or not so good in terms of the execution part. Coming back to the big statement, the company has been doing quite well in terms of being profitable for the past 6 quarters, right? And this quarter itself, they went to loss-making zone. So if I were to break down, let's take a look into their financial statements, specifically the income statement. I actually compare the different increase in terms of either the revenue, cost of revenue, gross profit, operating expense. You can see that the one that is growing much faster is actually the revenue is growing quite well. The other side of things is that the expenses is also growing significantly. And if you were to look into each individual line, you can see that the biggest jump is actually from sales and marketing. Yeah, so I went to find out that, what were they doing with their sales? Which makes sense for them if, let's say, if they are pushing out the flex plan. At the same time, they are also working with more of their partners. And I think when we talk about partners, that's where there's some profit sharing, which is why I believe that's where the higher cost comes in. All in all, if let's say we were to net minus plus every line item already, it became negative. And when I was listening to the earnings call, what the founders actually mentioned is that they are actually loss-making because of the expenses that is due to the 19 July, which is the Microsoft outage issue. So if I were to add in this 33 billion, right, then the net income is actually 17 million. So it's still a drop, which means that even with or without this outage, the key reason for them to have a drop in terms of their profitability is due to sales and marketing. Now then the question is, will they continue to spend more money to do sales and marketing, or would they like reduce a little bit? My take is that from what we have just analyzed together, what I have shared with you is that they are going with the new strategy, which is the flex plan, which means for them to convince their existing clients to change to this flex plan, I think it requires some resources. So I believe with all these things, it ends up to the sales and marketing. But let's not forget, once customers have used CrowdStrike, the next question is whether they will continue staying. So my question to you guys is, do you think they will stay? Do you think they will continue to use CrowdStrike? Yes or no? The high chance from what we have been talking from the first few slides all the way now, we talk about the gross retention rate, which tells us that the customers, 97% of them stays, right? And with all the other things that we talk about, when more people are using the flex, they will use more modules, right? And when they use more modules, they will stay, right? So what it means for CrowdStrike is that they just need to get more people to use it. More people will slowly adopt more modules, and by using more modules, they are going to pay more. So this, I believe they are actually focusing a lot on landing the deals first. I think they are still in the phase of landing more deals, right, through their partners or through themselves. Once the deal is landed, it is highly possible or high confidence for them to know that these people will stay. For now, you can see that they are plowing a lot of resources into sales and marketing, and I'm fine with it because I know that at the end of the day, the amount that is coming in, the revenue that's coming in the next year, the next quarter is going to be more and more. Thank you so much for watching to this video, and I hope that you have enjoyed and learned something from this segment of our weekly WealthPulse sharing. We conduct our WealthPulse every Tuesdays 8 to 9 p.m. as we deep dive into the latest and biggest market news and what this means to investors. Do remember to like, subscribe, and also share with more of your friends to support us in making investing easy for everyone to follow. Join us in our community through WealthPulse, and I have placed the link in the description box below. I will see you online then. Bye bye.